Well, it is Fed Day, and we are going to talk a lot about what is expected, what should be done. But frankly, folks, I have to get something off my chest, something that I have been thinking about for at least a week now. If you don't recall, I had a conversation with Melody Wright about the 2025 real estate market. Net, we saw a lot of challenges. We were in disagreement on timing. But what's really got me thinking, perplexed, freaking, it's like a worm in my brain, was at the very tail end of that conversation with Melody Wright. We started talking about what might happen in some theoretical world if interest rates collapsed to 4%. And it was during that pure riff that my mind went to, wow, the median home price might fall, might collapse. And I really haven't gotten it out of my head why I thought that until this morning. I finally figured out the riddle of why I actually legitimately think, that the median home price could and likely would fall if, and again, I'm not calling for it, if rates collapsed to 4%. So let me solve the riddle for you that finally made me feel comfortable with this discussion. And it's going to take a little bit of tying together some complexities, but it's important to understand how this would play out. So step one, we need to understand that the housing market is broken, right? We termed that on this channel years ago and have been proven right. Second, we called a transaction crash, not a price crash. And again, we were proven right. But underneath the transaction crash, what I have discussed but not really shared or anchored on was just how destructive this has been to the entry level or first-time home buyer. What do I mean by that? If you go back and look at historical averages of a healthy housing market, the first-time home buyer made up 40%. So to put that in context, in a healthy market, kind of 2019-ish, if we did 6 million total transactions, 2.4 of those would be entry level. Now, again, we have talked about it many times, but even just last month, first-time home buyers are now at a record low of 24%. Okay, great. What does that mean? Well, it means that every month that goes by that the entry-level housing is stuck at something below 40, we are, we're really stacking demand. The market remains broken. So the other thing to realize is, in a healthy housing market where the entry-level buyer is, 40% of the market, is the move-up buyer. The move-up buyer is active, right? They're selling their first-time home and they're moving to their next big boy home. But here's the deal. So if, we did 4 million transactions, and if there is a missing 16%, right? 40% minus 6 or minus 24 equals 16. So we're missing 16% of transactions. That means 640,000 transactions are missing. If we did 5 million, it means 800,000 transactions are missing. Now, why is this important? Here's the answer. When you understand median, which I've tried to help everybody understand, right? It's the number in the middle. And you realize that we're missing entry-level units, median home price has to go up. I just checked this morning. Let me get the numbers for you. Where did I write them down? The median home price in 2019 was $258,000. The median home price last month was $420,000. But remember, we're missing 16% of the transactions. So again, as the discussion with Melody Wright went, and again, it's just a theory at this point, but if you bring the theory home and you drop rates to 4%, you unlock that 16. And oh, by the way, it will reverse past the mean. So it might go to 42 or 44 or something like that. And you throw most of those transactions below the median, because again, let's be clear, first-time home buyers typically aren't buying $420,000 houses. But if we were to unlock that part of the market, just because of the number of transactions, we would actually likely see the median home price fall. That's what I couldn't get that out of my head. I'm like, just how bad of a problem is this? So at the end of the day, the key to getting median home price to fall and potentially crash or collapse, more than 10%, is you have to unlock the entry level buyer. That's the magic to all of this. You have to get the housing market functioning again. You've got to get that move up buyer again. And again, if you were to dump 16%, 20% more transactions all on the lower end of the scale, folks, it's just math. The median home price would fall. So I finally have the answer to what was been bugging me for a week. Again, it will be interesting to see when this happens. And again, remember, folks, we have historical precedents, and it's not a good one. In 1978, we did roughly 4 million transactions. 1981, we did 2 million transactions, and we didn't get above 4 million until 1996. Yeah, this could get ugly for a long, long time on transactions. But there you go. I now feel like I have solved the riddle, and I just feel better. I feel like 100 pounds lighter because it was just bugging me. All right, let's talk about Fed Day. Fed Day, lots coming. Lots should be coming, right? Again, we have the dichotomy of what they will do versus what they should do. So I think it's 11 a.m., 2 p.m. Eastern. We will get the rate cut. The experts are saying with 95% certainty. We're going to get a statement. The statement's going to be kind of bland, they're basically, I think, going to set up a pause in January. And then we're going to figure it out. How many rate cuts are they talking about? Is the terminal rate higher, or R star, or whatever they want to call that, the neutral rate? Is a pause in January the right answer? So again, it is Fed Day. It will be certainly discussed tomorrow on the daily financial news. But yeah, it's again, I hope the Fed pulls out a major surprise and doesn't cut. Again, if they don't cut, watch for a lot of volatility. I think rates would shoot higher. But yeah, that was a very interesting conversation. So the other thing I should let you know about is Anna Kelly. REI Mom and I yesterday had a very detailed conversation about what it would take for single family homes to crash and multifamily apartments to crash. We actually took both topics individually because they are easier to understand separately. And, go ahead and watch that video. We talked about it being a bloodbath, specifically in commercial, already down 20-25%. Class B, Class C, not yet trading. Certainly lots more pain. I will highlight one disagreement that Anna Kelly and I had during that conversation. During the conversation of commercial or multifamily, Anna was highlighting that she thought if it got bad, that the government could step in and, back some of these loans. And let me just be very clear. I should have been more clear in that video. I hope that does not happen. We have been calling on this channel for 3 or 4 years now that a lot of those deals were stupid. They were dead. They were wrong. They were expensive day one. I've been an accredited investor for a better part of 15 years. And the crap that I saw being pushed in 22 deserves to blow up. They were just bad deals. And I don't want the quote unquote government stepping in and backing bad actors. Let that stuff blow up. Let them find new owners, and let's start this cycle again. Net of the single family discussion was not much could dent prices in 25, but if a few things happen, 26 and 27 could get ugly. I'll let you watch that video yourself. I do want to welcome one more member to our school community. Shout out Hunter. Hunter, thank you for joining. Thank you for being a part of the group. Remember, introduce yourself, respond, get to level 2, get to level 3, so you unlock all of these amazing free goodies. We did get some housing and mortgage data today. Housing starts. We'll go through the numbers. Last month were 1.31 million. They were expected to rise to 1.34 million. Drum roll, please. Miss. 1.28 million. What about housing permits? Housing permits, kind of a sign of the future. Are they excited or scared? Again, we'll go in the same order. Last month, 1.41. They were expected to go to 1.43 or slightly better. They actually had a huge beat to 1.5 million. Again, folks, I think there is a general belief in the building world that deregulation is coming. There's general belief and hope that it is quicker and less expensive to build. So it's not surprising. It's not surprising that building permits are up. On the housing starts data, it says housing starts, and a lot of pretenders online think it's all housing, meaning single family homes. It is not. Remember, anytime you read the housing start data, it captures single family homes and multifamily homes. Like most months, the multifamily number is the most volatile and can be all over the map. Housing starts were single family housing starts were actually up 6.4%. So again, folks, the headline number will be housing starts fall. The big bears and crash bros will be talking about it, where in reality, single family homes building was up 6.4% month on month. It is down 10% year on year. But yep, there you go. How about mortgage demand? Mortgage demand for purchase up 1% week on week, up 6% year on year. Refi demand down 3% week on week, but up 41% year on year. Total demand, when you merge all of that together, is a negative down 0.7%. First decline in mortgage demand in 5 weeks. BFA survey of fund managers. This will likely be our last discussion of this daily financial news. The BFA survey of global fund managers shows a record low cash allocation. Record low. That all the cash is in. What is left to push the market higher? Average cash allocation today sits at a record low of 14%. Yes, BFA survey was highlighting that this is a quote unquote super bullish sentiment. Expectations for 2025 for the S&P 500, when you blend all the experts together, is up another 10%. Kind of wild. I think it was, what was it? Tom Lee from Fundstrat. What did he say? He says he sees S&P going to 7,000, but then settling out something below that. He sees the first half better than the second half. Folks, if you're coming out to our Vegas event, and let's be clear, you really should. We are less than 60 days away. Tickets are selling out. There's a chance if you wait too long, it will be sold out. So go to Eventbrite, buy your tickets. You're going to get 16 presentations, 6 hours of networking. You're going to be able to ask questions, get in the room with the right people. If you've never bought yet, get there. If you're a couple, get there. If you're stuck in the first 5 years, get there. Trust me. You want to be in the room in real life with other folks that are going the same direction. You will not regret it. Plus, it's Vegas. It's Valentine's Day weekend. Go do something cool on Friday with your significant other. Get 2 days of education and inspiration Saturday and Sunday, and then travel home Monday. Monday is a holiday. I do that on purpose. So if you're coming from the East Coast or whatever, you could travel home easy on Monday and not have to stress about missing work. So again, join school. See you in Vegas in real life. Take care. Have fun. Later.